Do we have like 3 angles now?
Yeah.
That's super awesome. Hi guys, welcome back to the tax series. This is the episode 3. And as we mentioned in the last episode is that we're gonna go through the preliminary tax card and also the income assessment. So I think we should just jump into it and explain what is the difference and what do you actually need to know when you're internationals in Denmark. Let's just jump into it. What is the preliminary income assessment and what is the tax card? What's the difference?
Yeah, good questions. Maybe before I jump into explaining that, we can just maybe remind that in Denmark we are paying taxes preliminary. So that means you actually pay tax in advance during the tax year. And then at the end of the year, you look back and you see, okay, this was what I earned, but now that the year has ended, how much did I actually earn? So you would always have prepaid taxes during the year, and then at the end of the year, you, together with the tax authorities, confirm this is actually my salary, so this is my final taxes. So now we're looking at the preliminary tax assessment, and this is really where you as a taxpayer can inform the tax authorities about what you expect to earn. And you need to inform it based on a full year income, which can be quite difficult. You don't really know necessarily what will happen during a full year. It may be that you change your job, you move to another address and so on. So there can be a certain, you could say, dynamic in your private circumstances. But this is everything, you can say, something that you need to put into the preliminary income assessment. And what is the difference then from that and the tax card? There's really not a difference. The tax card is something that is generated based on the preliminary income assessment. So once you do your magic, you calculate what you expect to earn and everything, you put it into the system, you click submit, then the tax authority system automatically calculates how much you should be paying in tax, what's your tax-free amount each month, and this information then actually goes into what we call a tax card. You do not need the tax card, but if you have an employer, that employer would need your tax card, and they can then afterwards go automatically into the tax authority system and collect the tax card.
Okay.
So the tax card is always something that's going to be generated based on the preliminary income assessment that you are creating.
So what, it's actually a natural question I have on my own. So if the students are having, let's say, they are working as a student job in one place and they're gonna work here for like 3 or 4 months. So how can you actually predict your income in the preliminary assessment?
Good question, and you can say, let's say that you are at the end of the year and you can start with a fresh start and say, I want to create my the preliminary income assessment for 2020. Well then, if you know that you have a job for 3 months, you would basically have to sit and do some calculating yourself and say, this is the income I expect to have, and then put it into the assessment. And it's very important that you can say, if you then realize, okay, I actually were able to work longer and get more income, the soon that you realize that, you should go in and update the figures in the system. And luckily, everything goes electronically, so you can more or less log in to the e-tax system 24/7 whenever you want, and you can create as many updates as you want to the preliminary income assessment. So there's no true limit to that, so if you have a lot of changes, don't worry, you can always go in and update it, and it's more or less being you can say done instantly, everything after you submit the numbers.
So but what happens if the viewers want to make their preliminary income assessment and they're not too sure about 2020? So what happens if you're not sure about what you may earn? Do you want to? What happens if you report too much, or what happens if you report too low?
you can say if the numbers are not right, well then in the end you could risk that you either overpay taxes, which is in the more nice situation, then you get some money back year end. But if you have, you can say, assessed wrongly, you actually earned more than you put in, well then the risk is that you have an underpaid tax.
Okay.
Because when SKAT, they generate your tax card, they do it based on the income you put in. And if you put in a too low income, potentially the tax rate has been calculated too low, and then what the employers are deducting every month from your salary and paying into the tax authorities is also too low.
Okay.
So that is the risk, and then I would say you have different opportunities to go in and correct. So let's say that you at summertime realize you forgot to actually put in your employment income. You can still make it and go in and correct it.
Okay.
But what it means is that then forward going for the rest of the year, you would need to pay a bit more in tax compared to the previous month.
So it will balance out or even out?
Exactly. It's more or less going to balance out. And then of course, the more you push it to the end of the year to do this kind of update, the more it's going to hurt you. So if you have paid too little for 10 months and you want to correct it for the last 2 months, that's not going to be the most fun month, because you actually have quite a large tax to be withheld in the income you then get out. So you can say always be focused on is anything changing in my private circumstances? Do I get a salary raise, for example? Go in and update it.
Okay.
Do you get a new address? Maybe you also need to go in and update that for a commuting deduction. There's different deductions that you also have to look out for. I know we'll cover that in another episode, but it's just to mention that everything is really connected here in when you create the preliminary income assessment. It's not only about income, it's also about deductions that you have as a taxpayer.
So how often should, I think you actually touched about it a little bit before, that how often should I update my preliminary tax card and also the income assessment? Because I think for me personally, I think I did it once in a while, but there was really no structure about it. But yeah, how often should I do that?
I think you can say it's a good thumb rule maybe to just remind yourself that each quarter.
Okay.
At least it doesn't matter if you think everything is the same as usual. Maybe just still go in and just have a look at the assessment that's in the e-tax system. Look at the numbers. Then maybe that's actually gonna be where it hits you. Okay, I actually forgot something.
Yeah. Okay.
So I do that myself as a thumb rule every quarter. So every month go in. And then if you have changes before, you of course also go in and update it. So whenever you have a change, again, if you change your address, if you get a new employment income or changes to that income, it could also be that you 1 month say you actually what do we call it, you cancel your SU, so you can earn more in salary income. That will also be something you need to go in and update in the system. Okay. It's not because you necessarily have to be 100% spot on every time, but if you are not, then in the end the risk is just that you could potentially have an underpaid tax. Okay. And I would also just highlight that it is possible to, you can say, trick the tax card to either be in favor or non-favor for you, but it's not recommended because in the end you will still need to pay the tax you should. But some people, they would maybe go in and put in that they have a large deduction, which they know in the end they wouldn't have, and that means that they would be able to get more paid out during the month, but then at the end of the year they actually have to pay tax back. Okay. Some they would also think, okay, I'm doing the opposite. I actually want to put in that I'm earning much more than I truly am. But that's also not necessarily the best idea, because that also triggers some other allowances like employment allowance. So even by raising the salary, you could also end up actually getting more allowances that you should, and potentially have an underpaid tax. So the rule of thumb is, you can say, always try to match the true reality.
So that is the golden rule for maintaining a healthy tax card, is actually to just be correct about the things, and don't do it like put in some high number or low number, because that will eventually maybe give you a good amount of penalty, if you can say it like that, in the end of the year.
I would say the thing that people they normally do, also Danish people, is that they sometimes wait with including the travel or commuting deduction until the year has ended, because then they know I get something back and it feels like an extra Christmas present. But I would say, as you say, the rule of thumb is try to be always precise and always updated when you have changes. Yeah.
Cool. So the last thing in this episode, can you explain examples on how to actually update the tax card income assessment? And we will of course show the screen. So what is the best, the essential elements that you need to be aware of?
So let's say that you are a student. And normally you would have a fairly simple economy. So you may have your SU and you may have your employment income, and then you may have a couple of deductions. So let's say that you actually commute to work and you are eligible for having that deduction. Then normally there's only 3 boxes you should actually be focused on when you log into your e-tax system. And I think we will show an example for that.
We will.
Not right now, but it will come, so we can show it actually with the different boxes. But it's fairly easy to identify once you have seen it once. You know the box for income, and then it's really basic, just typing it in. What is the new amounts? There's also ways to use the system to guide you for when you update the income assessment, what you have earned up until the day where you go in and update, and also how much you have paid in taxes, because everything is actually already in the system, because all you can say employers, the government, they have to report in every month what they actually pay out to you.
So what you can actually do as an international is just log in and actually see what you have paid until this day.
Yeah.
Okay, that makes sense. And we will, of course, cover this in our blog as well, where we actually show you step by step how to actually log in, and also what kind of columns is the most important ones. Unfortunately, as we mentioned in episode 1, I think, was that it's all in Danish. So you can actually use a Google Chrome translation and get the whole page translated. Otherwise, we will actually put some screen dumps in the blog as well, so make sure to follow that. But yeah, I think it was very cool that you explained the difference between it, and it's actually just the same at the end. But the golden rule, or the rule of thumb, just make sure that it's the correct one. The correct income, the correct deduction, and do it when you know there's something happening. I think that'll be a good thing to take away from this episode. So thank you so much for reviewing. I hope that it helped you a little bit about the Danish tax systems. And the next week we're gonna talk about the tax deductions. So as Daniel mentioned today, kørselsfradrag and traveler expenses, how can you actually get deduction from that? And we'll cover them in next week. So make sure to stay tuned and take care for now. Bye.